Welcome back to the channel. Today we're breaking down one of the most important interviews happening right now in the world of tech investing. Dan Ives, yeah, that Dan Ives, the global head of tech research at Wedbush, just went on Schwab Network and dropped some serious insight about where the tech market is heading. According to him, and I quote, "This is a tech bull market." And he's projecting a 15% rally across the tech sector this year alone. He says the AI revolution is just getting started, and he's not holding back on which companies he believes are going to dominate this next wave. In fact, he called out NVIDIA and two other major players that he thinks will continue to lead the big tech charge, even with their sky-high valuations. His message to investors: stop worrying about the short-term noise and start thinking 3, 4, 5 years ahead, because the future of tech is bigger than most people realize. So in this video, I'm going to show you that full clip of Dan Ives on Schwab Network, and then I'll come back with my own reaction, breaking down exactly what he meant and why it matters for you as an investor. After that, I'm going to give you my personal in-depth analysis of what I believe are the 3 best AI stocks to invest in right now, including one you probably haven't heard much about yet, and another one recommended by Dan Ives. If you only watch one investing video today, make sure it's this one. Stick around until the very end because this could seriously shift how you think about the market going forward. Before we jump in, do me a quick favor. Hit that like button and let's run it up to 1,000 likes, share the video with anyone interested in tech investing, and drop a comment below with your thoughts. And of course, subscribe to the channel so you never miss a critical update like this one. Alright, let's get into it. Here's what Dan Ives had to say.
Joining us now for Insight is the one and only Dan Ives, Global Head of Tech Research, Managing Director, Senior Equity Analyst of Wedbush Securities. Dan, I was so happy when I heard that I get to sit down with you. I love seeing you whether it's in person or virtually. So let's talk about the tech sector outperformance. We've seen the NASDAQ 100 reach for a record after record recently. We'll dive into everything that's going on with the Mag 7, but I want to know just your big picture take on the strength that we're seeing now in tech.
Yeah, and it's great to be here. I thought you'd be wearing one of your more bullish sports, in terms of the pink or the this. And look, the reality is that this is a tech bull market. And it's my view that in terms of the AI revolution, we're only just the beginning, the bottom of the first, top of the second. And now from NVIDIA to Microsoft to Palantir, you're going to see a risk-on environment. And I think we could be looking at tech stocks up 15% this year.
So AI clearly still the central theme within tech, but now there seems to be this divide between the leaders and the laggards in this group, especially when we think about the Mag 7. So what is separating, like what's the secret sauce for, say, NVIDIA, Microsoft, and Meta versus, say, an Apple or Alphabet?
It's it's AI. I mean, when you look what's really been the overhang on Apple, it's because of AI. Because, I mean, we were there at WWDC, and like we talked about, that was a yawner. And that's why they're ultimately going to have to either do a Perplexity deal, do something significant, because they have the best install base in the world. Compare that to what almost call CEOs right now that are laser focused. Look at Zuckerberg, what they're doing at Meta when it comes to AI. Look at Nadella. You look at the godfather of AI, Jensen, NVIDIA, and that's why you're seeing those stocks, because it reflects where they are in terms of the biggest tech boom we've seen in the last 40, 50 years. But the bears and the haters, if you focus just on valuation, you've missed every transformational tech stock the last 20 years, and you'll miss all of these, including names like Palantir.
Is it, when you think about AI for like NVIDIA, are we at the, kind of beginning or early beginnings of a new level of where it's like not a nice to have, but a need to have when you think about that? Like, for instance, with smartphones, right? Everybody didn't have to have a smartphone, but now you need one now. With AI, is it going to be so much part of the ecosystem that you need to have this, especially in your portfolio? Yeah,
you just nailed it. I mean, I think there's one chip fueling the AI revolution, and it's NVIDIA. There's no, I mean, look, there are, of course, other companies that are producing chips, but that's why globally, that's why there's only one godfather of AI, and his name is Jensen. And I think it comes down to...
Go ahead, sorry.
And it comes down to like the next leg of the NVIDIA growth story has just begun.
Okay. Well, it seems to be reflecting that obviously in the share price. And it's a very different perspective than we had back in April when there was so much pressure. And even the deep seek conversation seems to be an afterthought now. When you think about the Mag 7, should it even still be called the Mag 7, given that, you have this bifurcation within the group, right? Is it still relevant as a group, or should we start looking at these differently, especially when you think about the underperformance as it relates to Apple?
Yeah, but I would just say, with him at Microsoft, I mean, it underperformed for a while, and now look at it now, right, in terms of white hot, because investors have caught up. I still think you cannot just throw away that classification, because these tech companies, their install bases, and they're stronger going to get stronger. But it does speak to, you're not just going to group them all together. They each have different headwinds, different tailwinds, and right now there's clearly a sort of divide, especially when it comes to AI.
Do you think, when it comes to the conversation about tariffs, because some do worry about especially the tariff pressure as it relates to, say, Apple and Amazon, is that still something that, you have to figure out what the risk is when it comes to both of those companies?
Look, I mean, it's a risk, especially when it comes to Apple, given the China dynamic. But, it's our view that the administration is stepping further and further back. There's a de-escalation. We'll have some, scary headlines from some of the deals, but I think you'll have deals on the table, and that's bullish for tech, and I think it's bullish for the AI trade, especially when it comes to the U.S.-China trade deal. I think that's very, very important.
And so I want to go back to the point you made about valuations, because some point out that, especially some in this group are just too expensive, and it doesn't necessarily, the growth trajectory doesn't justify the valuation from some perspectives. What do you say to those critics?
I'd say to many of them, look, they're in their cave, their hibernation caves, because they can't see AI in the spreadsheets. I think it's just, you got to look out 3, 4, 5 years, an autonomous future, robotics, humanoids, enterprise AI, consumer AI. We're just in the beginning. The trillions that are going to be spent, and that's why I just focus on, there is just, it's a fourth industrial revolution that we just happen to be living in. And I think that's going to fuel a tech bull market next 3 years.
This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. First off, Dan Ives opens the conversation by calling this a tech bull market. Not a possible one, not a brewing one, but a full-on bull run. And he's not just talking about the NASDAQ numbers or a couple of stocks surging. According to him, this is the beginning of something massive. He compares it to being at the bottom of the first inning, so in baseball terms, we're barely getting started. Now, if you've been watching the NASDAQ 100 lately, you know he's not wrong. It's been breaking record after record. But what Ives is really saying here is that this is just the groundwork. The AI revolution, in his words, is about to fuel the next few years of growth, not just for one company, but for an entire class of tech players. And that leads us to his take on the so-called Magnificent Seven. Dan draws a hard line between what he calls the leaders, companies like Nvidia, Microsoft, Palantir, and Meta, and the laggards like Apple and Alphabet. Now that's a big statement. Apple and Google have been foundational tech giants for over a decade. But according to Ives, they're slipping behind in the AI arms race. Why? Well, he points directly to Apple's recent WWDC presentation and calls it a yawner. That's harsh, but he's making a critical point. Apple might have the biggest and most loyal user base in the world, but unless they make a bold move in AI, like a partnership with Perplexity or something major, they risk becoming an afterthought in this next era. Compare that to companies like Meta and Microsoft. Dan highlights Zuckerberg and Satya Nadella as laser-focused CEOs who are doubling down on AI. And then there's Jensen Huang, who Dan calls the godfather of AI. According to him, Nvidia isn't just leading, they are the engine behind the entire AI revolution. That's powerful, and it tells you where the smart money is flowing. Now let's talk about what Dan said regarding valuation critics. You've probably heard this before. Tech stocks are overvalued. Nvidia's PE ratio is ridiculous. This is just another bubble. Dan isn't having any of that. He straight up says if you're only looking at spreadsheets, you'll miss the boat. He compares those skeptics to hibernating bears, blind to the real transformation happening around them. And I've got to agree with him on this part. The traditional valuation lens doesn't quite capture paradigm shifts. We're talking about AI becoming a foundational part of everyday life, just like smartphones did a decade ago. Dan literally makes that analogy. Once upon a time, smartphones were a luxury, now they're a necessity. He believes AI is heading the same direction. Not just nice to have, but need to have. Then there's this great moment in the interview where Dan calls AI the fourth industrial revolution. That's not hype, that's a declaration. According to him, we're heading into a future where trillions of dollars will be spent on things like autonomous systems, robotics, humanoids, enterprise software, and AI-infused consumer tech. He's essentially saying this is a multi-year megatrend, and tech is going to ride it all the way up. Now about the Mag 7 term. Should we still be grouping these companies together? Ives admits the group is showing cracks, and there's a definite bifurcation happening. But he's not ready to throw the label away just yet. His reasoning? These are still the most powerful companies on Earth in terms of user base, infrastructure, and influence. They may be on different tracks, but they're all still in the race. He also touched briefly on macro risks, specifically tariffs and geopolitical concerns, especially with China. He acknowledges that yes, companies like Apple and Amazon could face challenges. But he also believes the broader trend is toward de-escalation in US-China relations, which is bullish for tech. He thinks any scary headlines will mostly be noise, and in the bigger picture we're likely to see deals and compromises that favor the AI trade. So what's my final takeaway from Dan Ives' interview? He's clearly all in on the future of AI. He's placing big bets on companies like Nvidia, Microsoft, Meta, and Palantir, while calling out Apple and Alphabet for falling behind. But more than that, he's encouraging investors to stop looking at the present moment and start thinking in time frames of 3 to 5 years. That's where the real wealth creation is going to happen. He's saying, don't get distracted by short-term noise, spreadsheets, or valuation purists. If you want to understand where the market is heading, follow the innovation. And right now, innovation lives in AI. So whether you're bullish or bearish, love Nvidia or think it's overhyped, Dan Ives is making it clear, this tech bull market is just getting started. And if he's right, we could be living through one of the biggest wealth transfers in modern financial history. Let me know what you think in the comments. Do you agree with Dan Ives? Are we still just in the early innings of AI, or are people overhyping this moment? And if you had to bet on just one of the Mag 7 to lead the next phase of this bull run, who would it be? Don't forget to like, subscribe, and share this video if you found it helpful, and I'll catch you in the next one. Let's start with Broadcom, ticker AVGO, a company that's absolutely essential to the AI ecosystem, even if it's not always in the headlines or the subject of viral news stories. While companies like Nvidia and OpenAI often steal the spotlight, Broadcom is quietly powering the very foundation of the AI revolution, working behind the scenes to make the impossible possible. Broadcom specializes in custom AI chips and high-performance networking hardware, the backbone of the AI cloud. Their expertise in designing and manufacturing these critical components means that every time you interact with an AI-powered service, there's a good chance Broadcom technology is involved somewhere along the way. For AI to work at scale, you need immense processing power and lightning-fast data movement. Broadcom delivers both, ensuring that data can flow seamlessly between thousands of servers, and that AI models can be trained and deployed at unprecedented speeds. They design ASICs, custom processors tailored for specific AI tasks, giving major cloud providers like Google and Meta a competitive edge. These chips are not off the shelf. They're engineered for maximum efficiency, performance, and scalability, which is exactly what the world's largest tech companies demand. Broadcom's custom chip business locks in huge customers for the long term. These aren't just one-off sales, these are multi-year, multi-billion-dollar relationships that create a stable and predictable revenue stream for the company. But it's not just about chips. Their networking switches and routers form the backbone of modern data centers, connecting massive clusters of AI servers. Without Broadcom's networking gear, the world's largest data centers would grind to a halt, unable to keep up with the demands of today's AI workloads. As AI models grow in size and complexity, the need for faster, more efficient networking skyrockets, putting Broadcom in a powerful position. Their technology enables the rapid transfer of data that's essential for training and running the latest AI models, making them a critical enabler of progress in the field. Their recent acquisition of VMware adds a software layer, letting Broadcom offer end-to-end AI infrastructure solutions. This move allows them to integrate hardware and software, providing customers with a seamless, unified platform for deploying and managing AI workloads at scale. This creates a sticky ecosystem, custom chips, networking hardware, and management software, all from one provider. Customers benefit from a tightly integrated solution, while Broadcom enjoys high switching costs and long-term loyalty. Broadcom is the ultimate picks and shovels play for the AI boom, providing the essential building blocks for the industry. Just as miners needed tools during the gold rush, today's tech giants need Broadcom's technology to unlock the value of AI. Their leadership in both custom AI accelerators and high-speed networking is a powerful one-two punch. This unique combination allows Broadcom to address the most demanding needs of the AI industry, from raw compute to seamless connectivity. As tech giants pour billions into AI, a significant chunk flows directly to Broadcom. Their products are mission-critical, and their customers are willing to pay a premium for reliability, performance, and innovation. Their engineering expertise and deep customer relationships make them hard to displace. Broadcom's teams work closely with clients to develop solutions that are perfectly tailored to their needs, creating a level of trust and collaboration that's rare in the tech world. This isn't a commodity business, it's about high-value partnerships and long-term contracts. Broadcom's role is strategic, not transactional, and that's a big reason why they're so well-positioned for the future. Broadcom also rewards shareholders with a growing dividend, adding income to the growth story. For investors, this means you get both the excitement of AI-driven growth and the stability of regular cash returns. Their technological moat is deep. Decades of experience and intellectual property protect their market share. With a vast portfolio of patents and a culture of relentless innovation, Broadcom stays ahead of the competition and keeps would-be rivals at bay. Their customer base? The world's most powerful tech companies making for stable, visible revenue. When you're supplying the likes of Amazon, Google, and Microsoft, you're operating at the very heart of the digital economy. The VMware acquisition is just starting to show its potential, integrating hardware and software for even more compelling enterprise solutions. This synergy is expected to unlock new opportunities in cloud computing, cybersecurity, and AI management. Broadcom isn't just a component supplier, they're a solutions provider, helping customers solve complex engineering challenges at scale. Their consultative approach means they're often involved from the earliest stages of a project, shaping the future of AI infrastructure. This makes them a more defensive way to play the AI trend, less about which AI model is hot, more about the unstoppable growth of AI infrastructure. No matter which company wins the AI race, they'll need Broadcom's technology to get there. Financially, Broadcom boasts consistent revenue growth, strong margins, and robust cash flow, fueling ongoing R&D and innovation. Their financial discipline allows them to invest in the next generation of technology while rewarding shareholders along the way. In short, Broadcom, ticker AVGO, is a leader in custom processing and high-speed data movement, with a sticky customer base and a powerful new software angle. Their unique position at the intersection of hardware and software makes them indispensable to the future of AI. They're quietly enabling the entire AI revolution from behind the scenes. While others make headlines, Broadcom makes progress possible, ensuring the digital world keeps running smoothly. If you want exposure to the essential infrastructure powering AI, Broadcom is a top contender. It's a company that combines innovation, reliability, and financial strength in a way few others can match. Their role is only set to grow as AI adoption accelerates. As more industries embrace AI, the demand for Broadcom's solutions will only increase, cementing their place at the core of the digital transformation. For investors, that means both stability and upside. Broadcom offers a rare combination of defensive strength and growth potential, making it a compelling choice for anyone looking to benefit from the AI wave. Broadcom is the unsung hero of AI infrastructure. Don't overlook it. In a world obsessed with the next big thing, sometimes the most important players are the ones working quietly in the background, making everything else possible. Now let's move up the supply chain to the next critical player. Stay tuned. Next up is Taiwan's semiconductor manufacturing company, TSMC, ticker TSM, the world's leading semiconductor foundry. If you've ever used a smartphone, a laptop, or even interacted with AI in the cloud, chances are TSMC played a crucial role in making that possible. This company is the silent powerhouse behind the digital age, quietly enabling the world's most advanced technologies. TSMC doesn't design chips, it manufactures them for everyone, from Apple to Nvidia to Broadcom. These are the companies that dream up the next generation of processors, but it's TSMC that brings those dreams to life, turning blueprints into billions of tiny powerful chips that drive our devices and data centers. Their advanced process nodes, think 3 nanometer and beyond, are the foundation for cutting-edge AI chips. These ultra-small transistors allow for more power, greater efficiency, and the ability to run the most complex AI models at lightning speed. Every leap forward in AI capability is built on the back of TSMC's relentless innovation in manufacturing. Virtually every major AI chip designer relies on TSMC to bring their innovations to life. Whether it's Apple's custom silicon, Nvidia's GPUs, or AMD's processors, TSMC is the common thread weaving together the fabric of modern computing. Their client list reads like a who's who of the tech world. TSMC is the linchpin of the global tech ecosystem. Without them, the AI revolution would stall. The company's fabs are the beating heart of the digital world, pumping out the chips that power everything from cloud servers to autonomous vehicles. Their manufacturing expertise is unmatched, with a technological lead that's years ahead of competitors. TSMC's ability to consistently deliver chips at the bleeding edge of what's possible is the result of decades of investment, research, and a culture obsessed with precision. Building a state-of-the-art fab costs tens of billions and takes decades of know-how. TSMC's moat is massive. These facilities are among the most complex structures ever built, requiring not just money but a deep well of expertise and a global supply chain working in perfect harmony. Their customer list reads like a tech industry all-star team, and AI is now the biggest driver of demand. As AI workloads explode, every major player is turning to TSMC to deliver the chips that will keep them ahead in the race. TSMC is investing over $100 billion to expand capacity, building new fabs in Taiwan, the US, Japan, and Germany. This unprecedented expansion is a direct response to the insatiable appetite for AI hardware and the need for a more resilient, distributed supply chain. This global expansion not only meets surging AI demand, but also mitigates geopolitical risk. By diversifying its manufacturing footprint, TSMC is ensuring that the world's chip supply remains secure, no matter what happens on the world stage. TSMC is also a leader in advanced packaging. Technologies like CoWoS and high-bandwidth memory are critical for modern AI chips. These innovations allow multiple chips to be stacked and connected in new ways, boosting performance and efficiency for the most demanding AI applications. They're not just making silicon, they're integrating entire systems for maximum performance. This system-level approach is what enables today's AI accelerators to handle massive datasets and complex computations with ease. The world's reliance on TSMC is so deep it creates a silicon shield. Everyone has a stake in their stability. The company's importance extends beyond business. It's a matter of national security for many countries, making TSMC a true geopolitical heavyweight. Financially, TSMC boasts strong margins, huge free cash flow, and a track record of returning capital to shareholders. Their consistent growth and profitability have made them a favorite among global investors, and their financial discipline is as impressive as their technical prowess. Every new AI data center, smartphone, or smart car drives demand for TSMC's advanced chips. The proliferation of smart devices and the rise of edge computing mean that TSMC's chips are everywhere, quietly powering the future. Their ability to manufacture at scale, with high yields and cutting-edge technology, is an engineering marvel. Few companies on Earth can match TSMC's combination of volume, quality, and innovation. As AI models grow more complex, the need for TSMC's most advanced chips only increases. The next generation of AI will require even more powerful and efficient hardware, and TSMC is already preparing for that future. They're the enablers of Moore's Law, and now, the AI explosion. TSMC's relentless drive to shrink transistors and pack more power into every chip is what keeps the digital world advancing at breakneck speed. When TSMC reports strong earnings, it signals the entire tech ecosystem is thriving. Their results are a bellwether for the health of the global technology industry, watched closely by analysts and investors alike. Investing in TSMC is like betting on the house. They win no matter which AI chip designer is on top. As long as the world needs more powerful chips, TSMC will be there, manufacturing the future. Their central role in the supply chain makes them one of the most important companies in the world. TSMC is the invisible backbone supporting the entire digital economy, from Silicon Valley to Shenzhen. The AI boom can't happen without TSMC, making it a cornerstone investment for anyone serious about this generational shift. If you believe in the future of AI, you believe in the future of TSMC. If you want exposure to the entire AI hardware market, TSMC is your gateway. Their chips are inside the products of every major player, giving you broad exposure to the entire ecosystem. Their leadership is only getting stronger as AI demand accelerates. TSMC's vision and execution are setting the pace for the entire semiconductor industry. TSMC is the world's AI foundry, don't miss it. As the backbone of the AI era, their influence will only grow from here. Now let's talk about the company that's become the face of the AI revolution. On to the king. Finally, we have NVIDIA, ticker NVDA, the name that's become absolutely synonymous with the AI revolution. When people talk about the companies powering the future, NVIDIA is almost always at the top of the list. It's not just a tech company, it's the beating heart of the AI era. If Broadcom builds the roads and TSMC paves them, NVIDIA is the one designing the supercars that are driving AI forward at breakneck speed. Their chips are the engines, pushing the boundaries of what's possible in artificial intelligence, machine learning, and high-performance computing. NVIDIA's dominance started with GPUs, originally built for gaming and graphics. But it turned out that the parallel processing power of these chips was perfect for the complex calculations needed in AI. What began as a way to make video games look stunning has now become the backbone of the world's most advanced AI systems. Their real masterstroke? CUDA, the software platform that locks developers into the NVIDIA ecosystem. CUDA isn't just a tool, it's a language, a set of libraries, and a community that's grown over years. It's the secret sauce that makes NVIDIA chips the default choice for anyone serious about AI. CUDA makes it easy for researchers and engineers to harness NVIDIA's GPUs for AI, creating massive switching costs and a deep competitive moat. Once you've built your models and workflows around CUDA, moving to another platform is a huge headache, so most people don't. Competitors can try to build faster chips, but replicating NVIDIA's software ecosystem is nearly impossible. The years of developer loyalty, the vast libraries, and the constant updates make it a fortress that's hard to breach. As a result, NVIDIA's GPUs are the gold standard for AI training and inference. Whether it's training massive language models or running real-time AI applications, NVIDIA is the first name that comes to mind. Every major cloud provider, AWS, Azure, Google Cloud, spends billions to fill their data centers with NVIDIA chips. These chips are the backbone of the cloud AI infrastructure, powering everything from search engines to recommendation systems and beyond. NVIDIA isn't just a chip company anymore, they're a full-stack AI platform. They've evolved into a company that offers not just hardware but also the software, tools, and services that make AI possible at scale. They offer GPUs, high-speed networking, thanks to their Mellanox acquisition, and a comprehensive software stack. This means they can deliver end-to-end solutions for the most demanding AI workloads. This integrated approach lets them optimize every part of the stack for maximum performance. It's not just about having the fastest chip, it's about making sure every component works together seamlessly. Demand for NVIDIA's products is so high there's a global scramble for their chips, driving explosive revenue and profit growth. Their supply can barely keep up with the insatiable appetite of the AI industry. They're innovating at a furious pace, launching new architectures yearly and keeping customers locked in. The pace of progress is relentless, and NVIDIA is always a step ahead. From the H100 to the Blackwell platform, each generation brings massive leaps in performance. These aren't just incremental upgrades, they're game changers that redefine what's possible in AI. NVIDIA is also expanding into AI software and services, capturing recurring revenue and deepening enterprise relationships. Their platforms like Omniverse and AI Enterprise are becoming essential tools for businesses worldwide. They're pushing into autonomous vehicles, digital twins, and industrial simulation, huge long-term growth markets. These areas could be as transformative as their core GPU business, opening up entirely new revenue streams. Financially, NVIDIA's results are staggering: rapid revenue growth, massive margins, and incredible profitability. Their quarterly reports routinely smash expectations, and Wall Street can't get enough. Yes, the stock is expensive, but their monopoly-like grip on AI and the sheer size of the market make the growth story incredibly compelling. Investors are betting that NVIDIA will remain at the center of the AI universe for years to come. NVIDIA is providing the blueprints, the tools, and the core building materials for the AI-powered world. Without their technology, much of the AI progress we see today simply wouldn't be possible. They're not just participating, they're leading the AI revolution. Under CEO Jensen Huang's visionary leadership, NVIDIA has become the company everyone else is trying to catch. Their technology is driving progress in medicine, science, finance, entertainment, and more. From drug discovery to blockbuster movies, NVIDIA's impact is everywhere. For the most direct and powerful way to invest in AI, it's impossible to ignore NVIDIA. Their dominance is so complete it's hard to imagine the AI landscape without them. With its hardware, software, and developer ecosystem, NVIDIA has built a fortress around its business. This moat protects them from competitors and ensures their leadership for the foreseeable future. They have a clear path to continued massive growth as the world transitions to AI. Every new breakthrough, every new application only increases demand for what NVIDIA offers. For now, NVIDIA is the undisputed king of AI. Their crown isn't just for show, it's been earned through relentless innovation and execution. If you want to ride the AI wave, this is the name to watch. NVIDIA is at the crest of the most important technological wave of our time, but remember, always do your own research before investing. Even the best companies come with risks, and it's important to make informed decisions. Let's wrap up with your next move. Whether you're a tech enthusiast, an investor, or just curious about the future, NVIDIA is a company you'll want to keep on your radar as the AI story continues to unfold. There you have it. Three titans fundamentally enabling the AI revolution: Broadcom, TSMC, and NVIDIA. These aren't hype stocks, they're the picks, shovels, and engines of the modern gold rush. If you're enjoying these stock tips and you're ready to level up your investing skills, I've got something game-changing for you. I've just relaunched my Value Stocks Investing Master Course, designed to teach you the exact principles used by investing legends like Warren Buffett and Benjamin Graham. But this isn't just theory. You'll learn how to spot undervalued companies using real-world metrics, build a high-quality portfolio, and protect your investments no matter what the market throws at you. Whether you're just starting out or want to sharpen your strategy, this course gives you the tools and confidence to grow real, long-term wealth. It's packed with step-by-step lessons, powerful insights, and practical strategies you won't find anywhere else. So if you're serious about investing smarter and building a future you're proud of, click the link in the description and pinned comment to join today. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now, I want to hear from you. Which of these AI giants has the most long-term potential, or is there another AI stock you think is overlooked? Drop your thoughts in the comments. Don't forget to like, subscribe, and share for more investing insights. Thanks for watching, and I'll see you in the next one. Stay smart, and keep investing in your future.